Well, when you look at emerging market stocks, it's sort of a conundrum. What you have is you have the emerging markets, which are growing faster than the U.S. They're growing much faster, in fact. Where China's growing around 7%, India's growing at 5%, and the U.S. is barely growing at 2%. But over the last year and a half or so, the U.S. market has significantly outperformed the emerging markets and stocks in the emerging markets. But what you've seen recently, since February, is things have turned around a bit, and emerging market stocks are starting to be rewarded for their higher growth rates. So we see, in fact, that the emerging markets have done better since February than the U.S. markets. So we do have some strength in emerging markets. Liquidity is returning to emerging markets, and things look very promising for emerging market stocks looking forward. Yes, even despite the run-up with emerging market stocks recently, and when I say run-up, I don't mean any extensive outperformance. They just barely nudged ahead of U.S. stocks over this period of time. There's still plenty of time for people who are looking to experience the benefit of the better underlying fundamental issues as it relates to emerging market stocks at these valuations. So all in all, it's a good time to buy. When you look at the emerging markets, what you see is about four specific advantages. First is a strong banking system that's supported by high personal savings rates in the emerging markets. People in the emerging markets culturally just tend to save much more than U.S. consumers do, and that's just a cultural thing. So the banks are full of money in the emerging market countries, especially Asia. What you also see big foreign currency reserves in emerging market stocks, and that's because they are exporters. They sell their stuff all over the world, so they're collectors of lots of currencies, not just U.S. currency, but they have euros. They have currencies among themselves, so they have a very, very diverse currency base. They also, the companies there also, because they're doing so well and growing so rapidly, they tend to have very healthy balance sheets without a lot of debt. And then this is the big one. This is the really big takeaway that you have to have for investing in emerging markets, and that's that you have strong growth fundamentals. And by that, I mean they have a very rapidly rising middle class. In fact, the middle class in the emerging markets is growing faster than anywhere in the world. So those people are going to demand more goods and services. This is Bill Hall for Money and Markets. Thank you very much.